Traders! Stop taking trades without a plan and form your plan on larger time frames. Bitcoin might be repeating a pattern that we saw during the 2021 cycle top. And if this structure plays out the same way again, the next move in the market could be very aggressive, people. But here's the important part. There's one major contrast between 2021 and today. Back then, Bitcoin had no strong support below the price. But right now, Bitcoin is actually sitting right on top of a key support level, which raises the real question traders should be asking right now. Is Bitcoin repeating the 2021 topping structure, or are we looking at the base for the next expansion higher? In this video, I'm going to show you the 2-week Bitcoin structure that comparing 2021 and 2025, the weak point that started the 90K sell-off, and why the daily support level must hold for the bulls. Also, the Bitcoin trade that is 40% into profit. Nice. All right. The Pippin setup still forming the liquidity trap, and the Morpho trade, which continues to respect the first profit objective. People, if you enjoy real market analysis like this instead of hype, make sure you subscribe. All you have to do is go to the description and press the subscribe button just like that. And hey, do me a favor, press the like button a few thousand times, will you? And share this with someone who thinks Bitcoin's next move is obvious and if this video will make them angry, because that's usually a good thing to share with people. Because right now, the chart is telling a very interesting story. Let's go! So, first, let's start with this. Something interesting is happening on the macro side. Michael Saylor recently hinted that Strategy could buy even more Bitcoin. Okay, and he wrote this: the second century begins, whatever that means. Saylor also made a bold statement about Bitcoin's long-term potential. I'm going to show you that in one moment. Here, let's take a look. Here's what he said about that.
I'm thinking that the next $50 billion won't get me 3.2. It'll probably get me 1% or less. And I'm thinking if I come up with a few hundred billion, I might, what I've said is if we get to 5% of the network, Bitcoin's going to be $1 million a coin. If I get to 7.5% of the network, it'll be 10 million a coin. So think of it as.
You get the idea. By the way, would you like to know how big my balls are? No. No means yes. So I will share anyway. My balls are so big that when I get invited to a Bitcoin conference, they have to book a hotel room for me and a separate one just for my balls. Michael, that's too much information. Yeah, you know you love it. That's right. If you don't shut up, I'm going to smack you in the face with one of them right now. All right, we need to move on, Michael, because we're getting into trouble here. So then we got this over here. JP Morgan, JPM, CEO Jamie Dimon, who has historically been one of Bitcoin's biggest critics, recently admitted that he was wrong about the cryptocurrency world. He now says Bitcoin is real and believes it will eventually be used by everyone. So when one of the largest banks in the world begins changing its stance on Bitcoin, it tells us something important. And by the way, we've heard this before. So institutional adoption continues to accelerate, and all of this is happening while Bitcoin is sitting at a major technical level on the chart, which makes the next move even more important. So that means let's take a look at the charts. So on the Bitcoin 2-week time frame, something very interesting is appearing here on this chart. Here, let me move this out of the way. When we compare the current structure to 2021, the similarities are actually very clear. All right, so back in 2021, Bitcoin formed a sequence of major swings. You can see that in this area right here, right? Price created a high, then it pulled back, right? Then it pushed to a new high again, and eventually forming a structure that looked very similar to a head and shoulders pattern. You can see that here. And after that structure formed, the market eventually sold off and started a broader correction. Now, when we look at 2025, right, Bitcoin is forming a very similar pattern again. We're seeing the same swing structure developing on the chart, right? But there's one key contrast this time. Back in 2021, when Bitcoin started to break lower, there wasn't any strong structural support right under the market. Price simply sold off into open space. But today, Bitcoin is actually sitting inside a major support area, which means if buyers manage to defend this region, then that means that the market could actually still have enough strength to push higher from here, right? And we know that region is right in this area right here. So if the support holds, then the entire structure might actually become the foundation for the next move higher. Now, let's take a look at the next time frame here, the daily time frame, because this is where the break really started, okay, where we have this bearish structure. So previously, Bitcoin was moving inside this strong bullish structure, supported by this positive sloping trend line, right? But around the 90,000 level, something changed. The market started showing weakness. Several small candles began forming around that trend line, and a clear weak point in the structure formed, right? And once that weak point formed, we had the sell-off. And that break basically retested the level briefly, and then it sold off aggressively all the way toward the $60,000 level where the bulls stepped in, right? Now, here's the thing. Since that pullback, Bitcoin has been consolidating inside this range. But recently, price pushed upward again, tapped into the daily fair value gap, which you see here. And then after tapping that imbalance, the market started to slow again, which brings us to the most important level right now, this green support line. And you can see price is gyrating around that line. The level must hold. So it sort of broke, but you could see it's back in the area. So that doesn't really count as a true break. If Bitcoin manages to hold this support and reclaim the structure, the market could still stabilize and move higher. But if the level completely fails, then we're looking at bearish liquidity below the market, which becomes a very realistic objective, which means we could see the 59,000 level once again. So right now, the market is sitting exactly at this important decision point. All right, let's move along. So the 4-hour trade setup. This was shared in the Telegram channel. So if you missed it, I don't want to hear any excuses. So here's the thing. This setup has been playing out very nicely. At this point, the trade is about 40%. It was maybe a little higher earlier into the position, right? The profit. But the price has moved strongly in the way we've been expecting. So because of that, I'm planning to move the stop loss to break even, right? And the reasoning here is simple. From this point, I want to see strong continuation on the bearish side. Remember, this is the smaller time frame. So if the market really wants to move toward the lower liquidity zones, it should move quickly and aggressively. As you can see right now, it's hesitating a bit, right? So this setup may no longer be valid if price can successfully push its way back through this fair value gap and back toward our entry price. That's why we want to consider that stop at the break-even level, right? Because that will protect us if this momentum shifts. Now, let's move along here and talk about Pippin, right? So the Pippin setup right now, it's developing a lot of liquidity inside the range, right? And you can see, though, it's starting to progress on the lower side. So as we would normally interpret this as a preparation for liquidity sweep, we're not getting that, right? So above this structure here, we have a clear pool of buy-side liquidity sitting above the highs. So the idea behind this trade is fairly simple. I'm expecting price to push upward first, sweep this buy-side liquidity, right, in this area here, right? And then from there, start the short, right? Basically consume the entries up there sitting above the major range, basically clearing the stops, right? And then that's where really the short should be, clearing the buy stops. So once that liquidity is consumed, then I will be looking for the short entry. But right now, the market is basically developing the trap. And now we're waiting for the liquidity to be consumed before getting into this trade. So again, no chasing this. You understand? Let the market come to you. Now, let's talk about Morpho. So structurally, nothing major has changed since I've talked about this. Price is still respecting the first profit objective, and we can clearly see that the candles are continuing to react from this support area, right? So not much going on here. So far, the market has not closed decisively below the first profit objective, which is a good sign for the position. Instead, it's pushing back higher slowly toward our second profit objective. If this support continues to hold, the next logical move would be the second objective, which sits higher up at the chart. So for now, the plan continues to be simple. Let the trade play out, protect the position, and allow structure to develop naturally. All right, let's move along here and talk about the trade challenge. So
quick update for the $10,000 to $100,000 trade challenge. It's all about showing how following a proper plan can grow the account over time. No gambling, no emotional trades, just structured setups and consistent risk management. Right now, we have multiple positions playing out across the market, right? We have the Bitcoin trade, we have the Morpho position, and we have the Pippin setup that we're still waiting for to get into play, right? Some trades will win, some trades won't win. But the goal of this challenge is not perfection. The goal is consistent plan following over many trades, because that is what actually compounds the account over time. Now, people, these trades, in case you're wondering, are all done on the MEXC platform. The reason why is simple. When you trade with leverage, speed matters a lot. You need fast order fills, deep liquidity. You also need low slippage and reliable fills. And that's exactly why I'm using MEXC for these setups. There's also currently a special campaign running for the community. If you check it using the link in the description, all you have to do, right? You could check it by clicking on that link. Sign up using the referral link. Deposit 100 USDT within 7 days. Then trade $1,000 or more worth in futures, and the first 40 users will receive a $50 USDT futures bonus, right? That's a great thing. If you were going to use MEXC anyway, you should go for this. Anyway, another important part of this challenge is tracking the performance properly. And every single trade I take is logged is inside the Profits Precision platform, because professional traders don't rely on memory alone. They rely on data. Inside here, we track the win rate, the reward risk ratios, the net profitability, the trade consistency, everything. If you're not journaling your trades, you basically trade without feedback, and that makes improvement very hard. Okay, people, by the way, this is free, okay? But you better check it out fast, because that could be changing. So let's talk for a minute about all this situation, right? Just to kind of recap. Bitcoin is sitting at a major structural level. Liquidity continues to grow across the market, and a big move could happen very quickly. That's exactly why I'm watching these charts so closely right now. So guys, I'm sharing new trades almost every single day, right? And the positions are updated live in my free Telegram channel. Everything, all the entries, the stops, right? The take profits. The full trade management is all there. Everything gets shared there first before the move happens, right? So if you want to follow the $10,000 to $100,000 trade challenge in real time and see the setups that I'm taking in real time, go to the links in the description. You can expand it like that, and it's right here, okay? Just click on that and you'll be there. Do it. Do it now. Do it. Okay, so join the free Telegram, and as always, stay calm, stay safe, and let the market come to you. Be patient, because that's the key to the whole game. Patience is what pays. Reacting to random price action is what can cost you a lot of money. Patience, people. All right, so with that being said, I will see you in the next one. Let's go!